very much, Mark, and thank you also to Tyro FinTech Hub for this evening. I'll start by outlining the Reserve Bank's mandate in this area. The bank is the principal regulator of the payment system, and it's got a separate decision-making body, which is the Payment System Board. The PSB's mandate is to promote efficiency, competition and stability in the payment system. However, our regulatory system is a co-regulatory one. That is, the payments industry will typically self-regulate, with the PSB only intervening when industry is unable to deal with issues relating to competition, efficiency or risk. As a result of the co-regulatory approach, payment systems in Australia largely operate without regulatory intervention, and there is no licensing regime for payment systems or for participants in payment systems. In those relatively few cases where the RBA has regulated, this has typically been to promote access and competition. For example, when MasterCard and Visa were bank-owned associations which only allowed bank participation, the RBA imposed an access regime to facilitate the entry of non-banks into the cards businesses. And the Reserve Bank has enacted credit and debit interchange standards, which have held down card interchange fees. Without this, it's likely that the card schemes would have driven up interchange fees in an attempt to gain market share and stifle the development of new payment systems. The bank also periodically plays a non-regulatory or a catalytic role in the payment system. Examples of this are our work established to encourage faster cheque clearing or the same-day settlement of direct entry payments, as well as the development of the new payments platform, which I'll talk about shortly. As you know, and as Mark has already alluded to, graduated regulation will often be desirable for new players in the fintech industry. But in practice, payments is an area where there already is a graduated approach to regulation. For example, the bank has certain powers with respect to stored value arrangements or purchased payment facilities that are not authorised deposit-taking institutions. In practice, though, the bank has not seen a case to exercise its powers, for example, to place conditions on any provider's operations. So instead, it's made declarations that the relevant act, which is the Payment Systems Regulation Act, does not apply to arrangements such as loyalty schemes, gift cards, electronic road toll devices, prepaid mobile phone accounts, or facilities with limited value or limited use. So based on consultations, the current regulatory arrangements in payments don't appear to be a constraint on the activities of fintech startups in the payment sphere. However, the recent FSI report noted that the current arrangements, which also involve ASIC and APRA, could benefit from some simplification in the case of stored value products. The bank supports this FSI recommendation and will be working with Treasury, ASIC and APRA on this issue. As we do so, we'll obviously take full account of industry views. A major initiative at the bank in recent years that may be of interest to you is our work on the new payments platform, or the NPP. The NPP is an industry response to the conclusions from our strategic review of innovation in the payment system, which we released in 2012. The bank asked the payments industry to come up with a proposal to fill the various gaps that had been identified in that review. In response, a group of large and small financial institutions is working on a project to build new payments infrastructure for Australia that will be at the global forefront. It will enable payments for Australian households and business and government entities that are real-time, available on a 24/7 basis, data-rich, and will also have simple addressing. The NPP is scheduled to go live in late 2017, and I'm happy to talk more about it later. It'll be a major step forward in terms of the services that can be provided to end users of the payment system. You can think of it as a new set of rails for the payment system that will be available for all sorts of what we're calling overlay services. That is various tailored payment services that can be provided by established financial institutions or by new entrants like some of you. Given the bank's mandate, we take a keen interest in technological and product developments in the payment space. We meet frequently with a wide range of fintech firms to get an understanding of new products, new business models, and any regulatory concerns you may have. For example, we've been meeting for several years with firms in the digital currency, blockchain, distributed ledger space, including ADCA, which is the local industry association. We're also an observer on ASIC's Digital Finance Advisory Committee that Marcus talked about. And the bank's a member of the Council of Financial Regulators, which recently established a working group which will consider the implications of distributed ledger technology for the Australian financial markets. And we're also engaging very closely with the ASX on its project to explore a distributed ledger solution to replacing its CHESS solution, its CHESS system. So I'll conclude by saying that there's a lot of interesting things happening in the payments area right now. We're keen to understand what you and the fintech sector are looking to do. We're keen to facilitate your efforts to provide innovative and improved payment services to end users. So feel free to come in and talk to the bank, especially if you have questions about the regulatory framework for payments in Australia. And I'll be happy to take any questions later on.